Hello and welcome to LAT's Weekly Market Insights. With US GDP dropping to an annualized rate of 32.9% in the second quarter and rising global COVID-19 cases, it came as a little surprise that the Fed appears set for an ultra-loose monetary policy for years to come. This has led to a shocking week for the US dollar as it slumps to its worst month in a decade. As we look to the chart here for the dollar index on the 4-hour, we can see this rapid and accelerating sell-off that we've seen coming in from the 2nd of July when we initially broke out of this lovely rising wedge. MPOs easily achieved for this price pattern and we continue to break lower. A glimmer of hope came in at this 12,000 round number region and at a multi-month support level through here. That potential bounce and region of support was also reinforced by the RSI 14-period divergence. You can see that bullish divergence here, suggesting this downtrend may be losing momentum. However, this is a clear lesson here. Never underestimate the strength of the trend and your primary analysis. Indices markets also continue to feel the pressure. During our weekly insights a few weeks ago, we discussed the early signs of weakness. These fears have been emphasized this week as European, Asian, and US markets all take a hit. If we come across to the DAX and we apply this to a 4-hour chart, we can start to see some of the damage that's being done. This bullish channel that's been intact from the lows initially driven by the COVID-19 pandemic on the 19th of March. This bullish channel, finally we have seen a break. That weakening strength of the trend symbolized not only by its failure to get back to the top of this channel, but also this lovely daily shooting star. This reversal pattern, almost in line with being a gravestone doji, sent this market lower, breaking the daily trend line, which was confirmed with 3 touches. However, there is still hope here for the DAX. Whilst the trend line has broken and the trend appears to be running out of momentum, this Fibonacci retracement perfectly respected here at the 61.8%. A break of that certainly is going to suggest further declines, ultimately looking for a break of this previous higher low, which was also in the formation of a hammer. That level sitting down here at 1158.4, a break of that cancels out this daily uptrend and certainly will be looking for further downside pressure. S&P here holding firm for the time being. If we bring this into a 4-hour chart, what I've done here is just circle the upward move. So blue here denoting the higher highs and higher lows representing this uptrend. We have failed and broken the previous higher low here, suggesting the uptrend has come to an end. However, with now a higher high and a lower low, we find ourselves in a sideways market, and S&P rebounding and bouncing back from this key support level at 3,200. We have a look at that back in the daily chart. We can also see that in the form here of a hammer. Up for interpretation, a hammer ideally should be forming at the bottom of a downtrend. This forming here at the top of an uptrend could also be a hanging man, a bearish reversal pattern. So all eyes here to S&P to see, will that 3,200 level be broken? If it can be broken, we would then be in a position to state that we have lower highs and lower lows and a downtrend has been established. As we come across to the FTSE, trading opportunities ever present this week. It had formed a range, a sideways consolidation throughout the course of the week, breaking lower yesterday with an impulsive break of this counter trend line for continuation of the larger term trend. Not only getting down to the lows of that range, but breaking it emphatically with a slight hesitation before now finding a little bit of support after that aggressive selling that came in yesterday. In the FX world, we continue to see strong gains from cable and euro dollar, fueled by the ever-present weakness and underlying weakness in the US dollar. As we look to next week, it's an action-packed calendar, a lot of data in play. Start things off with PMIs on Monday before we roll into a rate decision for the Aussie dollar, the RBA in action, and also for ourselves here on home soil, the Bank of England rate decision on Thursday. We'll wrap things up at the end of the week with our non-farm payrolls figures. Usual time 1:30 next Friday. Let's see where those numbers come out. That's all from me. Have a lovely weekend and see you next week for another weekly market insights.